S&P ending higher today. Canaccord GENUITY's chief market strategist, Tony Dwyer, making the call earlier this month to buy on the weakness. Since then, the market is up nearly 4%. He joins us now. Tony, fresh off of publishing a new report, which I haven't even read today yet, but I see that you're combating this whole stagflationary idea. So do you see the market continuing to head higher?
Sarah, it really comes down to what we talked about the last time I was on, and there's this perception that somehow the recovery from the recession is different. And clearly it's been stronger, it's been fueled by more debt. But again, of the 4 recessions that have been in my career, they're all done by unique reasons, right? You had the S&L crisis, the dot-com 9/11 bust, then you had the great financial crisis, and of course the pandemic. Always a different reason to go into recession and the shutdown of money, but the response is always the same. Throw as much money at it as you can, which means the market response is typically similar. So I did a funny thing this morning. I just simply did a word search on the internet for stagflation and then put 2010 in it, and then stagflation 2004 in it. So the viewers could do that themselves and see that it's the feeling that we're in a stagflationary environment isn't unique either, because we're coming off of that extraordinary excess liquidity driven growth in asset prices and economic activity.
So Tony, I mean, back on the 4th of October, you turned bullish again, and that's proven to be a very apt call. My question is the other way around. I get that you're still constructive, but what kind of level of gains from here would make you think we'd fully kind of priced in the relative good news that's out there, given that we've had such a good run from here? If we're 5% higher, do you already then have to start to think about taking profits again?
Yeah, I think we have to look at, again, if we're replaying this 2004-2010 environment, you could have another 5% move, and then you reevaluate based on where interest rates are going into it. But again, Wilfred, I would suggest that the discounting mechanism was actually in the summertime, when the cyclical stocks were all having a huge relative underperformance. The 10-year note yield was dropping down to 1.12%, and everyone thought that the economy was collapsing. Now, of course, we've got the cyclicals leading, we've got the interest rates rising, and frankly, Wilfred, to answer the most near-term question, I think that rates are probably bumping up against where they're going to go, which could actually stall out the rally a little bit here.
Wait, where do you think rates are going from here, and why?
Sarah, I think rates are pretty close to where they're going to be they're in the range they're going to be for the rest of the year. Again, this fear of inflation is real. These issues are real. But when they're talked about so much in the market, they get discounted. The 10-day rate of change on the 2-year note yield has had a heck of a move. It's reached an extreme. There's very few people that aren't talking about potential stagflation. And typically when you have such a wide array of people talking about one subject, it gets discounted really quickly.
Tony Dwyer, thanks for coming on, fresh off of publishing the new note with your calls.
Thank you, Sarah. Thanks, Wolf.